morning and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Thank you for joining us. Well, the head of the World Health Organization has warned that the world faces a catastrophic moral failure because of unequal COVID vaccine policies. He says it was not fair for younger, healthy people in richer nations to get injections before vulnerable people in poorer states. According to him, over 39 million vaccine doses had been given in 49 richer states, but one poor nation had only 25 doses. So far, China, India, Russia, and the UK and the US have all developed COVID vaccines, with others being made by multinational teams like the American, German Pfizer vaccine. Almost all of these nations have prioritized distribution to their own populations. Ladi, you know, I kind of understand what WHO is trying to say here. The world is a global village.
Exactly.
I mean, if you concentrate on yourself and leaving out the poorer nations, then you are even at risk. People will keep moving and infecting people. So you are not even safe. So I think the earlier we distribute this vaccine equally and ensure that put out proper policies for the distribution and it gets to the right people, it gets to the poor people, whether you're rich, whether you're poor, I think it will be safer.
Because if you cure it in one country, you cure it in another.
Absolutely.
Yeah, so let's look at the global oil market. Oil prices were mixed in the afternoon of Asia trading hours today, with international benchmark Brent crude futures up 0.49% to $55 per barrel. U.S. crude futures were up about 0.1%, lower at $52.29 per barrel. On Monday, oil prices fell further from 11-month highs and touched last week, ending a rally that started at the end of October on production cuts and strong Chinese demand, with the market's outlook questioned as coronavirus infections rise. The benchmarks had rallied in recent weeks, buoyed by the start of COVID-19 vaccine rollouts and a surprise cut of crude output by the world's biggest oil exporter, Saudi Arabia. Surging new infections throughout the world, however, have raised doubts about how long demand would hold up.
And back here, the central bank says it is ready to release about 300,000 metric tons of maize into the country's markets in February. In a statement released yesterday, the CBN explains that the move, which is being carried out through its Anchor Borrowers program, is expected to help reduce the price of the commodity and increase its demand as well as the profits for farmers. The plan released by the CBN follows efforts by critical stakeholders working with relevant government and security agencies to end the challenges caused by middlemen and bandits in accessing the product. Maize currently sells at 155,000 naira per metric ton.
And it's a big congratulations to the Nigeria's former agriculture minister and president of the AFDB, Akinwumi Adesina, who has just been honored for his leadership role in the Africa Continental Free Trade Area process. The head of Africa's multilateral finance institution was honored alongside 10 African heads of state and government on Friday last week. The award was organized by AE Trade Group in collaboration with the African Union Commission, the African Business Council, the Pan-African Chamber of Commerce and Industry, and the Federation of West African Chambers of Commerce and Industry, and the East African Chamber of Commerce, Industry and Agriculture. The AFCFTA, which is the largest free trade area in the world, began trading on January the 1st this year and is expected to speed up the recovery of the continent and enhance the resilience by increasing the level of intra-African trade in goods and services.
I think it's an award well deserved.
Exactly.
I mean, he has played a lot of role when it comes to agriculture. When he was the agri minister here, he advocated for making agriculture a business. He actually has a passion for that. He has really, really done well.
Yeah,
not just for himself, for the country.
Exactly.
And of course the world.
Making us proud.
Okay, last week, Moody's rating agency commented on the rate decline in Nigeria's treasury bill market. It says Nigeria's ultra-low treasury bill yields and falling lending rates will constrain its banks' net interest margins and pre-provision profitability, diminishing their ability to absorb loan losses and Nigeria's still challenging operating environment. To discuss this, Robert Omotunde, Chief Investment Officer at AfriInvest Securities, joins us next. All right, and we're being joined by Robert Omotunde, Chief Investment Officer at AfriInvest. Thank you for joining us, Robert, and Happy New Year to you.
Thank you very much for having me.
So Moody's is one of the world's leading sovereign credit rating agencies. Their comments on Nigerian macroeconomic environment cannot be said to be a ringing endorsement. It refers to very weak macro profile and difficult operating environment for banks. So can you explain how the new inflation data with headline inflation of about 15.75% and food inflation of almost 20% will affect the current monetary policy stance?
Well, I think that what Moody has said in the report is just, again, reiterating some of the weaknesses we know have always existed with Nigeria's macroeconomic fundamentals. And again, this is not a cheering report. It's not a cheering news for Nigeria, again, because since the recession of 2016, we're barely come at a particular conundrum, and then came COVID-19 pandemic, which again has worsened, our macroeconomic fundamentals. One of the things that Moody, has mentioned in that report is the fact that our macroeconomic indicators are very weak. And one thing that still continues to strain Nigeria's well-being in terms of economy is the fact that for the revenue of government, there has been, so much dependence on oil. Kudos to this current government, they have deliberately made efforts to, de-emphasize oil, especially in the presentation of budgets. But what has been so, not consistent with that model is because we're yet to see strong revenue sources other than oil. So to that extent, most of these rating agencies who have rated Nigeria's credit for international subscription will want to take action anytime there is a red flag. In essence, it's that since COVID-19 struck, we've seen oil prices hover at very low levels until very recently, currently, around the election period in November, when we started seeing a recovery from below $40 per barrel, and it hit as much as $57 per barrel last week before we saw, some form of moderation. But I think what it has scored very significantly is the fact that the revenue fundamentals of government are weak, and the budgets are not telling the story in terms of the weak fundamentals of government budget. And then that's what you see that when you look at the budget, it seems like the deficit sources of that budget, even on the face of the budget itself, suggests that it's so huge. When you now look at the fact that government may not even actualize some of the revenue assumptions on the non-oil side, which has been put into the budget, then it then heightens the risk, especially for credits, commercial credits that we have obligations for. Inflation came out, and it came out so weak, again, because we already expected it, the consequence of border closure in 2019, which has now been lifted. But again, damage has been done already. So, and we saw depreciation of the currency. I think we saw that happen consistently in 2020. And then we saw increases in electricity tariff, the deregulation of the downstream oil and gas, pump price, petrol. All of these factors are still what was, culminated in the inflation figure we saw at 15.75. We are still expected to see that high levels up until maybe mid-year, when the base effect is expected to kick in and moderate, the effect of inflation. But I think towards the end of the year, we will still be at the double digits. In terms of the economy in itself, from the recession of 2016 that we came out from in 2017, we never went back to the level of growth trajectory which we were recording before the slump in oil prices experienced mid-year 2014. And now COVID-19 has met us again. We've seen another recession in 5 years. And the projection is that weak growth will still most likely dominate for the next couple of years, except something fundamental changes. And that's the reforms that needs to be put in place. You will look at the report that Moody mentioned, the fact that we have weak governance, corruption in the system, and these are factors that are beginning to impact on the performance of most corporates, particularly the banks, which the Moody's report also touched on.
Okay, looking at the upcoming MPC meeting, do you think there's a possibility that the monetary policy authorities will change the current accommodative stance towards a tighter stance at the meeting of January 25th and 26th?
It's a difficult period for the Monetary Policy Committee because if you look at what most central banks are doing all over the globe, it's a pandemic period. So most governments are coming out with stimulus, both from the monetary side and the fiscal side. And look at all the developed economies that are even stronger in terms of fundamentals. They've had to resort to a lot of stimuli in order to boost economic activities. And I think this was what the Monetary Policy Committee was trying to do last year when they tweaked the MPR for about 2 times before we finally found it at 11.5% levels. So it's difficult at this time for the MPC to now change stance. The economic activities are still very weak. We are not even sure if there will not be another lockdown. And even if there is no lockdown, the risk factors are still engaged because of this second wave of COVID-19. So it's very difficult for the committee to come up with changing stance in terms of accommodative, the Adobe stance of reducing MPR, putting more money in the system. It's difficult at this time to change that because the economy is still very weak. And to that extent, there is still, we still need a boost. If developed economies are, coming up with different, incentives just to boost the economy, and it's happening on both ends, the monetary and the fiscal. Joe Biden is going to take over the presidency of the U.S. from tomorrow. He's already talking about additional stimulus. And if you even look at the stimulus that we've gotten in a country like Nigeria, compared to most developed economies relative to our GDP, it's very low. The stimulus we've gotten from Nigeria is barely, up to 3% of our GDP. But if you look at some countries, developed economies have had it close to even 10% of GDP. So clearly the committee is going to be, taking a tough decision. I think what they would likely do is to maintain status quo and still continue the heterodox monetary policy that the central bank, has been playing out. Our own situation is very peculiar. In most economies, as COVID-19 struck and economic activities weakened, what we then saw was inflation levels decline. US, for example, would normally operate at 1.2% level of inflation, but it dropped to as low as 1.2, 1.3. But in our case, what we saw was weak growth and high inflation. So it's a very peculiar economy and it requires a peculiar application of economic policies. Otherwise, you will be, complicating the issues that Nigerians already face.
Now, Robert, Moody's also raised concerns about Nigeria's what they called ultra-low treasury bill yields. This has been going on for a while, owing to some of the policies put in place by the central bank. Do you see this changing, or are we going to continue with this trend? What's your thought?
It's the most difficult part of my job, for example, as a chief investment officer. If I can predict accurately where the yield levels will be, then I will take position and make money from it. But in this climate, it's very difficult. Again, because of the heterodox monetary policy of the government. Theoretically, if we go back to the drawing board, when economic activities are weak, what economic theories suggest is that you stimulate that activity. Stimulating economic activities means that interest rates should be lower. so that if interest rates are lower, people can borrow more. When people have money in their hands, economic activities can pick up. I think that is the perspective that justifies the low level of yields that the government, has maintained, or the central bank has maintained since 2020. But I think where Moody's perspective comes from is Moody's know that one of the sources of foreign exchange earnings for Nigeria is through foreign portfolio flows. And to the extent that we have lower yields in the fixed income market, the likelihood is that we are not going to get enough FPI flows into our country. And we've seen that happen in 2020. It has dropped from as high as $7 billion in a quarter to as low as, below $500 million, as a Q2. So that is to tell you that we are suffering in terms of flows into our economy, into the fixed income market, to be specific. So Moody is concerned about that source of flows. But I think the perspective is that central bank feels comfortable because in terms of assets, the liquidity is here. You cannot imagine the quantum of huge liquidity that we have in the system, because at the end of the day, the central bank or the DMO gives guidance. It is still market that determines the level that it wants to, settle at. So to that extent, I think the central bank and the DMO is comfortable and confident in the level of liquidity they are able to get within the system. But that may not help our external vulnerability, because again, it means that we get that. And the market has been clamoring for a change in tide, for higher yields, to dominate again. And that's why you saw that in December, we saw that bearish mood in the bonds market, which is now beginning to suggest as though we will have higher yields. But again, we cannot determine that until maybe the next auction, which is happening tomorrow. I think most traders, most portfolio managers are waiting for that auction result, because it is at the end of that auction we will know the direction of yields for 2021. And then we now begin to see activities in the fixed income market. As we speak now, we don't even get those activities, occur at this time.
All right, we'll see how that plays out. Thank you very much, Robert, for your time, and thank you for always being on the show. Please do come again. And commodities market update is next.
And for commodity market update, Bolanle Agbaje, one of the research analysts with Financial Derivatives Company, joins us now. Hello, Bolanle.
Hi, morning.
Good morning, Bolanle. Happy New Year to you. Good to see you.
Good to see you too.
So let's start with one of the burning economic issues.
Yes.
China's growth has continued to accelerate despite the continuous spike of the COVID-19 virus. China posted a growth rate of 2.3% in 2020.
Yes.
What's the cause of this?
Well, it's great that, China was, despite the fact that, the virus started in the country, and they were able to buck the trend, the global trend. They more or less came out with a V-shaped recovery. I think the recovery was more intense in Q4 2020. I think the reason for this is because China has like a draconian way of, recovering their economy. They made sure that the relief for the from the COVID-19 pandemic was more intense within their country. They obviously closed their borders. And also, I think one of the major drivers of their growth in 2020 was more or less industrial output. So as soon as, they opened their economy and increased activities within the economy, they made sure that industrial output within the country actually increased significantly. And usually that's one of the major drivers of growth.
Now, China is one of Nigeria's, or rather, is Nigeria's major trading partner.
Yes.
So what is the implication of this growth rate for Nigeria?
I think the most direct implication will be from the oil price aspect of things. China is one of the major consumers of oil globally, and even with the OPEC meetings they've had in the past, they more or less looking at China and India, recoveries in these countries to boost demand for oil. So definitely we would benefit in the sense that if demand for oil increases, then we should see oil prices increasing in the near to future term.
Well, what are the lessons here for Nigeria to learn?
Well, I think the major lesson would be increasing supply within the economy. There's nothing as there's no other stronger growth driver than increasing supply within the economy, because once you're more or less once you increase supply of agricultural produce or whatever you have a comparative advantage in, you're able to export that, and usually once that happens, it's a no-brainer. Your growth levels will definitely increase significantly.
Now, you talked about oil and the fact that, of course, China growing, and that's positive for us as oil exporting country. Then looking at the trend in the global oil market now, we have seen oil coming down a bit despite the vaccine, but then we have seen different variants of COVID, which is now a concern and limiting demand. So even though China is, recovering fast, as you have said, what is the implication for the trend we are seeing in the global oil market now? Are you worried?
I think the only worry that we're seeing is that when you have increases in oil prices like this, then you start to look at what U.S. producers are doing, shale oil producers are doing. Whenever it gets to a point where oil prices have reached about at least from $50 per barrel, it's more profitable for these U.S. producers to produce oil. And that also means that it's reversing the trend that we had been seeing with OPEC. Saudi Arabia came out to reduce or deepen output cuts significantly to make sure that there's much impact on the prices of oil. But with U.S. shale, starting to climb, then it means that there's this hamper on oil prices in the near to future term.
So what is the implication of this for OPEC's current output cut?
There's no implication in that sense, because I think OPEC would still just carry on with, cutting output at least in 2021. But regarding oil prices, we don't expect that oil prices would reach pre-pandemic levels this year, which was about $64 per barrel in 2019, average oil price. But in Q4 2021, we should definitely start to see oil prices climb towards the 60s and more or less, continue the growth trajectory from there on.
Now, talking about the U.S., the market is waiting on Yellen, on what Yellen will probably do as regards the stimulus package announced by Biden, and of course on the dollar. Do you see this changing the trajectory we're seeing in the oil market as it is?
Yes, definitely. Because if you're injecting funds into the economy, you're trying to help small businesses to recover from this global pandemic, then it means that shale producers will definitely benefit from it. And if they do, and they're able to increase production significantly as a result, then we'll definitely see some negative impact on oil prices. And although I think the only thing to look at is whether Biden or Biden's administration would, be softer on us when it comes to, relating with OPEC. And something tells me that it's going to be more positive than, the previous administration that we had seen.
So what's your outlook for the market right now?
Well, my outlook for the market, like I mentioned, is that we expect that, oil prices to keep climbing the way it is, but we do not expect that it would get to, pre-pandemic levels this year.
But now we're seeing Gabon.
To be realistic.
We're seeing Gabon production climbing.
Yes.
And is expected on year-on-year basis to rise by about 7.6%. Will that, dampen prices?
Not necessarily, because Gabon's output quota is at that 155,000 barrels per day. And I'm sure this had already been factored in by OPEC members when it comes to, the impact on oil prices. So I don't necessarily think there would be any negative, impact on this boosting production. It just really means that Gabon is doing a better job at getting to, or increasing production to what it was previously.
All right.
Let's look at Greek commodities.
Yes.
Cocoa price down in Nigeria. What is contributing to this?
Cocoa prices are currently trading at about $2,300 in Nigeria, as opposed to $2,500 per metric ton in the global atmosphere. So what we're seeing is that in Nigeria, we've seen an increase in cocoa production. And usually once that has happened, you should definitely see prices, come down significantly. But I think the good news to take from it is we're definitely increasing our supply of agricultural commodities, and that's positive for the economy. And also it would definitely make our exports more competitive. We're definitely going to be attractive when it comes to, exports of cocoa. And I read that the variation of cocoa that is being produced is improving, and the quality is improving as well. Okay. So that also supports, our competitiveness.
And in turn help our
yes,
foreign
and exchange. Yes, exactly.
Okay, now we read on the news yesterday, CBN planning to release some grains, maize, out there, about 300,000 metric tons of maize, in February. Yeah. I mean, a lot of people believe, okay, this is going to help bring down the price of this commodity.
Off the bat, when you read that, it seems like a small win. It looks like good news, but when you look deeper, Nigeria's consumption of maize is above 1 million, and CBN is only releasing about 300,000. A large portion of our maize is still imported. I think they gave permission to about 4 agro companies to import maize. So it definitely means that the impact of this 300,000 metric ton of maize affecting prices almost down to zero. And it also comes to question is where has this maize been stored? Why is it just being released in the market now?
How much do we even have, in reserve?
In reserve that they're releasing this amount. But like I said, it's a small win, and it seems like because I also saw that it was from their Anchor Borrowers program, and some of the anchors that they had funded. So I guess it's a positive for them, and it's a small win, but we still have a long way to go when it comes to domestic production.
Okay, and as soybeans dropped on the global market, what does that mean for us?
So we're currently number 2 in Africa when it comes to production of soybeans. It's not necessarily great for our export revenue, but I don't expect that soybeans will keep going. I think one of the major drivers, China is again one of the biggest consumers of soybeans, and it seems like they had reached capacity when it comes to the inventory level buildup of soybeans, and so they had decreased their demand for soybeans temporarily. But I don't see this happening in Q2.
Yeah. Okay, we saw the inflation numbers out, and really not impressive there. 37-month high. Yeah. So what can we expect in the short term?
Well, inflation is high. Compared to November, we saw a slight decline, so that's great. But we still see the demand pull factors, the cost push factors, and the exchange rate pass-through effect. None of these factors have necessarily changed. I think the only factor that we had seen had more or less changed its course would be disposable income that individuals have, and that had more or less decreased demand. But on the other hand, we're also seeing that the CBN had is trying to print money to fund the federal government overdraft, and this is not necessarily great because our marginal propensity to save is more or less zero compared to our marginal propensity to consume. So the impact of that would be negative on inflation, except the CBN comes out to do, although they did mention plans to securitize, this particular overdraft, and that would mean that interest rates will keep rising as a result. But in the near term, in January, we don't expect that inflation will be as high as what it is in December, just because of the disposable income effect. But if nothing is done, because I do think that the CBN's hands are really tied, because if one thing is done, it leads to, the negative impact on another aspect of the economy is detrimental. So
what do you expect at the next MPC meeting?
It's going to be one to watch, because literally I don't even know what, the CBN would more or less do. I think they would focus, they might increase interest rates, but if they do, I don't see that having a significant impact on inflation while they're doing this with the, government. And when you're looking at what the CBN can do, if they do increase interest rates, we're currently in a recession. The negative implication of that is on our growth rate. So what can they really do to boost?
Well, a lot of people say they will have to retain status quo.
They most likely would have to, just because it would be detrimental to the economy. And I know, obviously, they're looking at the fact that investors are not coming into the economy, there's no funds flowing, but the negative impact on this growth rate is the main focus, I would suppose.
Okay, a quick one. Take us through the domestic commodities price movement. And
we're seeing mixed movements in prices, although the price of Gary had increased to about 14.5 per 50 kg bag. Other prices like onions have declined significantly. We've seen fall in prices in tomatoes, pepper, and we do expect that this trajectory will follow suit because we're seeing increases in the supply of many of these commodities, and coupled with the reduction in demand.
Thank you very much, Bolanle. Always a pleasure having you.
Thank you so much.
Thank you. We'll take a moment and we'll be back.
Now let's look at Monday's the equities market at Monday with Edidi Ongewang.
Good morning, Ladi. Well, with the gains we saw last week in the market, it was only expected to see some profit takers coming to that space. And we saw profit taking on bellwethers, Dangote Cement, FBN Holdings, and flour mills. Now, that pushed the all-share index lower by 0.23% to 41,082.38 points, while the equity cap was at 21.490 trillion naira. Volume was higher yesterday compared to Friday's session by about 15%. We saw 738.52 million units worth 4.17 billion naira, all traded in 7,396 deals. Now, sectoral performance was mixed. The banking sector was up marginally by 0.01%, and we saw gains on just GT Bank and EcoBank Transnational, but all the other, lenders were negative. Consumer goods was down 0.62% due to declines on flour mills, Guinness, international breweries. Industrial goods was down 0.43%. Of course, that was due to the declines on Dangote Cement, while insurance and oil and gas were higher. But let's talk to David Adonri, a stockbroker, for more. Good morning, Mr. Adonri. Thank you for joining us on the program.
Thank you. Good morning. Always a pleasure.
Well, today the NSE is holding its annual 2020 market recap and 2021 outlook. What are you expecting from this, and what are you looking forward to hearing from the exchange?
Yes, it's going to be a wonderful occasion, and it will be an avenue for the Nigerian Stock Exchange to showcase its unimaginable performance for last year, which made it the best performing market in the whole world for last year. But looking at the year 2021, it probably will not be as rosy as 2020. But if the monetary authorities retain their expansionary monetary stance, and the COVID pandemic is brought under control, the situation could even be better. So we will cross our hands and watch events as they unfold.
Well, while we, cross our hands and watch what happens at that event today, let's talk a bit more about the market now. The insurance sector has been posting gains in recent times. What's going on that counter?
Yeah, probably the forces of supply and demand. And when the environment is distressed and there is turbulence, insurance takes the forefront. A lot of people will want to protect themselves. So a lot of attention is going to that sector because investors believe that that sector will be stronger moving forward. Although their recapitalization has been suspended, but a lot of them have also increased their muscles, having recapitalized recently. So all those factors are likely to make the activities of industry more prosperous. And so that is what investors are targeting for returns, and hence greater demand for insurance stocks.
Well, what are the opening calls in the market as we speak?
Yes, although the market started at a low pace yesterday as a result of the the impact of the price decline of Dangote cement. But I think that was one of the events because the other sectors were robust. So it's not unlikely that we'll see a market situation that will be healthy throughout the week. And remember that investors are also anticipating that dividend announcements will start hitting the market very, very soon. So we are in the dividend season, and so expectations are likely to sustain the tempo of activities in the equities market.
As investors, are paying attention or, positioning themselves ahead of the dividend payout, for investors that are not already in the market, what would you, a stockbroker, advise them? For investors intending to come into the market now, what would be your advice to them?
Yeah, it will depend on the investment objectives of those investors. For those who are targeting a long-term investment, of course, they will usually stick to the strategy of investing regularly so as to average out their cost of investment. And for the short-term speculator in the market, they are essentially in the seller's market, but there are still some intrinsic values in some stocks that can be exploited. So those short-term investors can sniff out those undervalued stocks and position in the belief that the dividends are likely going to drive up the prices so that they enjoy their capital gain. So that would be the scenario for the two different kinds of investors.
Mr. Adonri, thank you for your input on the program. David Adonri is a stockbroker at High Cap Securities. Ochimi and Ladi, I hope you are listening to Mr. Adonri's advice for investors like you who should be coming into the market at this time.
Well, Eddie, I anticipate cautious trading this week, pending when the Central Bank's Monetary Policy Committee meets. I'm sure investors are waiting to hear what the CBN this time around would have to say.
Yeah.
Okay, we'll take a quick break, and when we come back, we'll do an opening call to London. It's Tuesday morning in London. Let's talk to Juliana. Good morning, Juliana. Well, the World Health Organization has warned that the world faces a catastrophic moral failure because of unequal COVID-19 vaccine policies. Now, the organization is saying it's unfair for younger, healthy people in richer nations to get injections before vulnerable people in poorer states. That's one warning global leaders need to consider. What are you hearing where you are about this?
Absolutely, it's a massive story, Chimaze, especially one for the anti-vaxxers, because I know there's a growing campaign, mostly online, of people that don't want to get the vaccine and are urging people not to get it. But you've got to be careful, because who does and who doesn't get this vaccine is going to be a topic of much discussion towards the end of this year, towards the beginning of next year, and I suspect for a couple of years to come. And the World Health Organization yesterday sounded the alarm because they're not happy at what they see as the politicization of the vaccination. There's one statistic which is pretty alarming. They say that 39 million doses of the vaccine has been administered in the world's 50 richest countries. In the world's poorest countries, just 25 have been administered. So that's 39 million versus 25. That's a massive, massive gap. And they are concerned that the richest countries are monopolising this, not just the countries and the leaders who, of course, are desperate to inoculate their citizens, but also the pharmaceutical companies that, as we've seen through previous pandemics, including Ebola, they're only interested in their bank balance. They're not interested in what happens across the globe. So they have said that, this is a state of emergency. that it is going to have definitely consequences, even for the global north, if they continue down this route. There is hope. There is the COVAX facility. Now, 180 countries have signed up to this COVAX facility. Apparently, under this this group of organisations, they've secured 2 billion doses of jabs. Delivery should start taking place next month. But one of the other issues that the WHO warned is that pharmaceutical companies are focusing on regulating in other countries, not for COVAX. So it's a really important issue, and I think it's something that we should be pushing out purely because there are so many people that are advising people not to take the vaccine. But the vaccine is going to become a very serious issue of concern towards the end of the year, because if there isn't enough for everybody at the moment. So if you can get it, of course, science is telling us that we should.
And yesterday, the Prime Minister chaired the first meeting of a new business council designed to coordinate the government's economic response to COVID-19 with leaders from the country's biggest companies. What was the outcome of this meeting?
Well, it's a little bit hush-hush. There were statements released on Whitehall's websites, basically just saying that this new Build Back Better Business Council is going to be advising the government over the foreseeable future just about how they can maximise their benefits now that we're in this post-Brexit scenario here in Britain. Britain really want to make sure that they position themselves as being the first in many different innovative ways, including the first to promote new science, green, clean technology and the environment. So this was chaired yesterday afternoon by Prime Minister Boris Johnson. On his side was Chancellor Rishi Sunak. We had about 30 business leaders from British Airways, from GlaxoSmithKline, from Land Rover Jaguar. And they were talking also about the vaccination. Again, the vaccination is a topic of much discussion around the world, and that topic is going to keep growing. Boris Johnson did emphasise that the priority, the most priority for economic security in this country is making sure that the vaccine rollout goes pretty well. It is going pretty well so far in the UK. I believe at the moment we've vaccinated about 4 million people. Yesterday we moved on to the second stage, and so now people over the age of 70 and the clinically most vulnerable are being asked to come and take their jab. So yes, there's a new business council. Boris Johnson pretty happy that he's got some of the world's leading CEOs advising just how Britain can, re-solidify their position in the world.
All right, let's talk a little bit about Brexit and the issues. Fishing lorries from Scotland have staged a protest against the Brexit red tape that say is either delaying or running exports of their fresh shellfish to the EU. What do you know about this?
Well, it's a major story, another big headache for Prime Minister Boris Johnson. His in tray is pretty full at the moment, but this is a big political issue, particularly as Scottish referendum. The appetite for a Scottish referendum on independence is extremely high, and they're having local elections this year. Since we left the European Union officially, well, when the transition period ended on December the 31st, Scottish seafood farers have been having issues getting their fresh fish and seafood into the EU because of bureaucracy and red tape. Apparently, it's taking about 5 hours for trucks to be vetted, which means by the time it arrives in restaurants in Spain and France and the rest of Europe, it's being turned away. Because of this, a lot of this food was stopped from going out of Dover. There has been discussions even within the House of Commons. There's been accusations that Boris Johnson isn't taking this seriously enough. So yesterday, some pretty large, angry lorry drivers descended upon Whitehall, just displaying their frustration. There is a very brief statement from one of the Scottish Seafood Association senior members, saying the industry has basically been ground to a halt, and businesses that employ hundreds of people in communities around our coastline are losing money. Many of these seafood farers are now having to ship to Denmark to avoid a lot of this red tape. Dominic Raab, the Foreign Secretary, and the Environment Secretary, George Eustace, are trying their best and do say that they will be refunding some of these or compensating some of these fishermen, and that it's just a teething issue, that it will slowly come to an end once they're able to make sure they can get a lot of these customs declarations forms going through. But, you know, this is a post-Brexit period, and we were warned that there would be some issues in the first couple of weeks, and we're seeing them, Chimmy.
Absolutely is expected. All right, I'll see you later in the day, Juliana. Well, Ladi, I'm sure you have some kind of update from your cryptocurrency, but let's, I guess it's time to hear from Eddie.
Yeah,
the debt and currency market.
Debt currency.
Time we'll be focusing on the currencies market today, and Ajibola Aero Phillips, the FX trader at FSDH Merchant Bank, will be joining us for that. Good morning, Ajibola. Thank you for joining us on the show.
Good morning. Thanks for having me.
Well, the Naira appreciated by 0.21% yesterday at the I&E window. Now, what has activity been like in that space?
The market has really been quiet, relatively. Turnover has been quite low. Some of the FX users, which are the biggest FX users, that's the importers. Some of them are yet to resume operations fully based on the holidays, and then some second wave of the virus. So we've not seen a whole lot of activity in that market space. And the biggest one that we saw was sometime last week, where there was about 200 million in turnover. But that's usually the average, where market really is functioning effectively properly. But on the whole, with respect to your questions, turnover has been quite low in the market since the turn of the year.
All right, Ajibola, thank you for your input on the program. Ajibola Aero Phillips is an FX trader at FSDH Merchant Bank. Ochimi, over to you and Ladi for the updates on the crypto market.
Well, today it's Ethereum. Traders are expecting it to return to its previous high, which was $1,400. Now it's trading at $1,365.
I know about Bitcoin. I don't know about Ethereum.
Ethereum is the second largest crypto in the market.
Oh.
Yeah, so that's the one for now.
Okay, nobody's talking about Bitcoin right now.
Bitcoin is on the side for now.
It's quiet. Thank you, Ladi.
Yeah.
All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.
And I'm Ladi Williams. Thank you for watching.